Okay, so the stock market fell 7% today, and there's clearly panic and some blood on the streets. So what do we do after a fall like today? What's causing it? And the latter half of that is what's causing it is twofold. One is the fears from the coronavirus spreading as we have more testing and more positive, and people starting to wonder how far and wide is that going to impact the economy longer term. And the second is the deep decline in energy over the weekend, where the Saudis decided to push hard on price, which had oil prices falling into the 30s. So those two things coupled together starts to make the market wonder, where are we heading? Are we heading into a recession? And how deep and hard should we sell off stocks? The first people in were a lot of leverage in the last couple of weeks, and especially today, still coming out of the market. Those people who are chasing momentum and chasing strategies that were working for a while, but now they have to get out of those types of stocks and cover their positions that they have with leverage. Of course, we don't invest that way. We're long-term investors. We collect our dividends. We invest in companies we want to own over the next decade. So we're not going to make any knee-jerk reactions. Just like I used to say when I would fly C-130s, the first emergency procedure was to sit on your hands. We couldn't eject from a C-130. We had to think. And I would counsel our clients to do the same. Because we don't want to panic at this time, make any rash decisions that are made based upon what's going on today. We want to think longer term. So if your personal circumstances have changed, or if you feel that you can't accept additional losses in your portfolio, we may want to pull you back from your current stock allocation, which for most of our clients, including myself, are just around 50%. We've been at 50%, we've been conservatively positioned effectively because I felt valuations were getting ahead of themselves, especially in the high momentum names. We talk about indexing is something I'm not a big fan of, and you've got this proliferation of ETFs that are out there that are effectively pushing and making the bigger stocks even bigger. And that can exacerbate the downside when all the mathematical algorithms start to come into the market and we have the leverage coming out and deep selling that's occurring. I don't think this is a panic on Main Street yet. It's starting to get there. We're not having calls from clients yet, for very few who have called in and expressed concern. It's definitely more of a panic on Wall Street. And it could certainly go deeper. I mean, we can have energy companies that we own. We don't own any stocks, but we have bonds that we own that have difficulty getting through this period of time if oil prices stay at a lower valuation. And then secondly, the coronavirus could continue to spread, causing fear. From a grand scheme of things, I don't think this is a gigantic issue when compared to the common flu, but because of the rapidity of the spread, it's causing concerns. It could cause further nations, like Italy just decided to effectively quarantine their entire nation and could shut down restaurants and many of the parts of the service sector that our nation relies so much upon. So if you have any questions, as always, feel free to give us a call. I don't think this is a time for us to panic sell. I think we just keep collecting our dividends and staying there and actually look for value when we see it if this sell-off continues to occur. Appreciate your trust. I know these are concerning times. They are for all of us. And it's probably a good idea for us to read a good book and get out into nature and spend time with our families rather than turning on the TV and worrying about the day-to-day volatility. But I thank you for your continued trust, and don't hesitate to call if you have any questions.